China, the world's second largest economy, is struggling to keep up the pace of growth following 2 decades of double-digit growth. I spoke to Haig Bathgate, joint CEO of investment management firm TCAM, about China's growth story and the economy's capital flows issue.
Yeah, I mean, China is interesting, isn't it? Because you can't really trust the data. I mean, our take is it's like shuffling deck chairs on the Titanic. So all they're doing is postponing the inevitable. They're doing all the bad stuff again. They're evergreening non-performing loans. They're pump priming state-owned enterprises, and they're effectively artificially creating GDP growth, which they can do for a period of time because they're sitting on a mountain of cash and a mountain of reserves. But those reserves are being depleted. They're having to use them more to defend the currency peg, and you can't continue that, forever. So we think they are postponing the inevitable, but there's a shock coming from China at some point in the future.
Capital flows has also been a major issue in China. How have the government tried to stem the tide?
Well, they're trying to, and they do stem the tide through limiting the capital that can be withdrawn. So as an individual in China, you can only withdraw $50,000 a year. That's a hard restriction. However, the way that the consumers and the populace are getting around that in China is they're doing it through companies. So you set up a company, Chinese state that they want to be the largest companies in the world and leaders in their industry. So they're quite happy for Chinese companies to buy other foreign companies. And we saw that with the failed bid for Starwood at the start of the year with Ambang. So that's the back door where you can get money out of renminbi and into dollars, and that's the way that the investors in China are circumventing the rules.
Haig, do you think their efforts have been effective?
It's certainly starting to be effective. It means that clearly every time that they do that and more renminbi are sold and more dollars are bought, that the Chinese have to effectively, the authorities have to offset that to maintain the currency peg, because you're creating constant selling pressure on the renminbi. So they have to sell some of their dollar reserves and repatriate those back into renminbi to keep the exchange rate in balance. So that they can do that at the moment because of their reserves, but they can't do that in perpetuity.
So how concerned are you then in regards to China and the Chinese economy at the moment?
Well, we're not concerned short term because they do have the tools to manipulate the data, but the longer they defer it, the bigger the bang when it comes. We know that from previous crashes. So they are deferring the inevitable. At the moment, the investment community is quite complacent about it, and probably rightly so, because it's not going to come home to roost anytime soon. But it is going to happen at some point, and for that reason, we're certainly avoiding exposure.